Yes, I'm good, thank you. Right, I sent you another map today.
Yep.
We want to go into that one. But before that, about the pre-scene, now I think the pre-scene is out officially from today, I think. So
Okay.
you should be now working very hard on the pre-scene, reading the pre-scene all the time, and try to get many out of that pre-scene. So as I said, you must go through some of the Google and see whether there are any particular annual reports about the film industry or film company. So you can see the financials, how they present it, and compare with our financials, what we have presented, and see whether there are any big differences.
Okay.
Because you remember I told you are the finance manager, not the management accountant like what we normally see. So probably being the finance manager, and we saw some of the deficiencies in the financial statement. So there may be few areas to be tested on that presentation. What I did was today, I worked out, remember we were looking about the dinosaur crush tree. It went into some problems with the special effects, and we were having a little bit of concern about the screening of the show on the due date, and it was our opinion last time when we wrote that we should postpone it. But now again 2 weeks have passed since then, and now you receive another email from Isabella. That's your finance director. So Jonathan sir started redoing the special effects, and our producer who has seen the special effects is satisfied to a great extent, but still believes it is not as per our original expectations. So you can see that although we did not make a very special recommendation, but we were of the view that the film will not be of good quality if it is taken, because we were discussing the risk involved when we try to do a rush job, hasty job, that kind of a thing. But having said that one, they probably have decided to go with the film, and they have got the new redesigning done. The initial research suggests that the new film will not be as success as earlier two films of the same series, and revenues are expected to be 20% drop from the original forecast. And as said earlier, special effects will cost 20% more, and the forecast reveal it will end up with a huge loss. We have no time to do any more adjustment, as we are committed to show the film in USA in May 27. So sometimes these are what we call risks that we have to accept. We will try to reduce it, but certain times you can't do anything. You just have to go along, because the film is already sold to the USA market. You have to deliver the film. So I think they have decided, okay, it is not up to our great expectation, but what to do, we have to do it, and we may end up with a huge loss.
It looks like a suicide, yeah.
Yeah, but at times there is very little we can do, because if we don't release the film, we may suffer a lot of penalties and all that. So you have to, something like depending on your luck, because these are all estimates, but we will look at our luck, something like that, and go ahead with the project. This is what they are doing. It's like suicide. Yeah, right. I need you to draft me a report on the accounting and disclosure requirements, disclosure implications of this film in our disclosures to stock exchange in our first quarter performance reporting. So we are in February. So our first quarter reporting will come up at the end of March. And what they're asking is, what we need to disclose to the stock exchange. Remember, we are a listed company, and we need to be truthful, transparent in all what we do. So true enough, it's going to be something like a suicide, but what are we going to do here?
Mm.
What do you think? What will we do in it? So that's the first part of the question. Then,
Yes, like the
mhm.
accounting and disclosure implications of the film. Like, are they asking for the figures and how much we're
No,
going to loss?
you can't give any figures because they have not given us figures,
Yes, exactly.
right?
Yeah.
But what we can talk about is what we have to first understand is, should we talk about the loss, impending loss, or should we just
Mm.
keep quiet?
Mm.
That's the first thing.
Mm.
So, but
Minimize the loss. Or, yeah. Yeah.
there is no way of minimizing the, yeah, we will take all possible steps to minimize the loss. That's all right, right?
Mm.
But this is about at the end of each quarter, we have to make
Mm.
disclosures because the film will come up in somewhere in May. So one might take
Mm.
a stand and say, look here, it is not even happening in first quarter. We don't need to mention anything about it in this report
Mm.
because this is
Is
not
this the quarter report for the shareholders?
quarter report for the shareholders and the stock exchange. Exactly.
Okay, yes, yes.
Yeah. What do you think? Do you think that we should report? What do you think?
I don't think so, because the shares are going to drop. You might just say to take a risk on the and hope that something will work, and the forecast figures will be, it won't be as bad as the forecast figures.
Yeah, but look at the word in what they say. Will cost 20% more and forecast reveal it will end up with a huge loss.
These are huge. This is when I read this
Uh,
an hour ago, when I read this, this looks like a going towards bankruptcy. Like, you spend
yeah,
so
it's
much
a
money.
huge loss. It's a huge loss means it has a material impact.
Absolutely.
So
Absolutely.
whenever there is something material impact, it need to be disclosed. If it was
Mm.
just a loss, we could have probably avoided it. But we have to be truthful, transparent in our dealings with shareholders. That's what good
Oh.
corporate governance says. That's what the disclosure requirement says.
But you in the real world, do the companies actually follow this?
Yeah, they have to. If they don't
Mm.
follow and if they end up with a loss, they can be charged, sued for misleading the shareholders.
Mm.
We give information to the shareholders for them to make economic decisions. So
Mm.
when we know, if we don't know, it's a different story, right?
Mm.
When the initial research we have done, if we have not done a research, it's a different story. But when we have done
Mm.
a research and when we have found that it is going to end up with a huge loss, the word huge plays a huge role here.
Mm.
It's a material loss. So any material impacts upon the financial position need to be disclosed.
Mm.
IS 10 events after the balance sheet, events after the statement of financial position talks about what need to be adjusted in the financial statements, what need to be disclosed in the financial statements. This
Mm.
need not be adjusted because it has still not happened.
Mm.
If it has happened, we have to go and adjust the revenue and adjust the receivables or whatever it may be. But here it has
Mm.
not happened. But this is something that we know, the board of directors are well aware that it is going to end up with a huge loss. And
Mm.
therefore, the IS 10 disclosure requirement says we need to disclose it because it is material for the shareholders.
Mm.
So that is what they are
Yeah.
asking.
So we'll have to disclose it then.
Yeah. Accounting, we don't need to make a provision because IS 37 talks about provisions, contingencies, contingents, liabilities, and provisions. We don't need to make a
Mm.
provision. Provision need to be made for something which has happened already. This is what is
Mm.
something to happen, not yet happened.
Yep.
So any future losses, we don't need to make a provision for future losses. But if the future losses are substantial, we have to make a disclosure. That is what the requirement is. So according to the IAS 10, this is something happening after the events after the 31st March, 31st December 2016, and it is all about the next quarter. So because it is next quarter, since we are well aware that it is going to be a huge loss, we need to disclose that fact to be truthful and to be transparent. And as SIMA members, we are expected to maintain SIMA Code of Ethics, which says we must be of integrity. So that is what you should be elaborating and writing about. So you can discuss about the SIMA Code of Ethics. You can discuss about the IAS 10 disclosures. You can discuss about the material part of the losses, and you can say you don't need to provide it because it's a future loss, and therefore IAS 37 says future losses should not be provided, but if it is material, it must be disclosed. So that is what that part of the question should be looking at.
Okay.
Then the next part is a very important one. As you can see from the attached news report, Business Recorder, for last month, there has been a leak into the press that creates major problems, as some cinema networks with which we have signed MOU on a profit sharing scheme has shown reluctance to screen the show on the schedule. Right? Stephen is remember our CEO. He's concerned that article will not motivate the viewers to see the film. He has asked the members of the management team for our thoughts on the severity of the motivational problems and for suggestion as to how they might be overcome. Please also address Stephen's concerns in your report. Let's look at what the press article is all about. So, this is Business Recorder, 10th of January 2017, just 1 month before your exam, 1 month before exam year, right? Mentin senior managements have denied the rumors that their long-awaited very first 4D film, Dinosaur Crash 3, is going through some issues with special effects. Anton Chan, the distribution director, commented that the new film will be ready for launch on the due date in May 27, and it will be a success even better than the earlier 2 films of the series. In the meantime, rival film producers have been arguing that the film has undergone many changes in special effects and it will not be a box office hit when released. Film viewers are unlikely to patronize the film as per rivals, the way the other 2 films were patronized. So,
viewers are unlikely to patronize the film as per the rivals, the way as per the rivals, the way that they do.
Yeah, the rivals say this film will be a failure. Your competitors, whoever, they say it will not be a success like the other 2 films, what they produced. Yeah.
Okay.
So that's the second part of the question. So Stephen is asking us, will note.
Again, one thing I must say, these questions are not, you have to have just there is not a lot about technical knowledge. It's all
no, we don't. Actually, the case studies are not to do too much with the technical knowledge. No, they don't ask about the film.
I see all these numbers and I'm thinking how I'm going to figure out the numbers, because as soon as I read the accounting and disclosure implication, I thought it's going to be a huge financial report or something, but you're right, you have to read it properly. I didn't read the fact it was in your first quarter.
Yeah, you have to read it very carefully what they're asking, and it's very little to do with the technical part of film producing or phone manufacturing. It's all about what we see as a financial person, as a management person in the day-to-day operations.
And sometimes it's not strictly financial as well. Like the second part of the question about the media
Yeah,
report and all that. It's not strictly financial. Again,
no,
where you can have questions like that as well sometimes,
yeah,
where
yeah,
you are
yeah,
just as a
because
management skill.
yeah, because you will
Management skill.
always, because you are a man, you are a basically, when you say financial manager, you are of all the skills. You are a total person. So it's not
No
only,
wonder you.
yeah,
No wonder you become a CEO eventually.
yeah,
It's because you.
exactly, because we have a very wide knowledge. You know about
Mm,
marketing, you know about production, you know everything. Being the finance
mm,
manager, you have a you
mm,
have a you have a kind of a attitude for figures, but it's not only
mm.
figures. It has many
It's
other
not
things.
just.
Yeah.
Mm,
So now you have to look at. So you have to now again, as I said, it's a 45-minute session. So we
mm,
probably will take about 15 minutes to read and understand it very carefully. If you don't read it,
mm,
you might miss something and go and land it elsewhere. And keep about 5 minutes for wrapping up. So the balance 25 minutes again, maybe
mm,
12, 12, 13, 12, we will split between the two tasks.
mm,
So the first task what we have is about a report on the accounting and disclosure implications
mm.
on our
I'm gonna
first
start.
quarter
Yeah.
performance reporting,
Yeah.
right? Second part
Mm-hmm.
is about the motivational problems and suggestions how they might be overcome.
Mm.
So there again,
It's like somebody who needs to go in the media and or media reporter or media management sort of thing.
yeah. Because how we can, because now because of the media report, most unlikely
Mm.
the people who had the idea of watching the film may decide not to watch the film.
Hmm. How to get their attention back? How to
How to get the people to watch the film, because if you can't,
motivate them?
yeah, you may be ending up with a loss, but you want to minimize the loss.
Hmm.
You want to minimize the
Yeah.
loss. So how
Use
to
the
do,
media. Use the social networks. How to get them back? How the attention
exactly,
back?
yeah, right, something like that. Yeah. So
Hmm.
first let's talk about that our accounting and distribution disclosure implications. So
Yep.
one thing what we know is, according to the IAS 37, that
Hmm.
is the standard related to the provisions, contingent liabilities, and contingent assets, right?
I need to read the IS 37. Yeah.
IAS 37, yes. You have to read IAS 37. Provisions, contingent liabilities, and contingent assets.
Provisions,
Contingent liabilities
contingent liabilities,
and contingent asset.
contingent
Asset.
assessment.
That's the
Can you
standard.
speak a bit about that?
Yeah.
Just a bit
Yeah,
briefly.
that's correct. So according to that one, so this is what you should be writing. Uh,
Mm-hmm.
to recognize it as a provision, if you want to make a provision should be recognized only when the entity has a present obligation. Only when the entity has a
Can you
present
say that?
obligation.
Can you start again, please? So I started to recognize. No, it's not
Yeah,
that. You just started.
provision should be recognized only,
A, a provision
should be recognized only,
should be
recognized
only.
when
Yeah.
an entity has a present obligation,
Has a present
obligation
obligation. Yeah.
as a result of past event.
Cost event. Yeah.
Secondly, it is probable
Secondly,
It is probable.
It is probable
That an outflow of resources
will flow out
from the entity.
From the entity.
Yeah. Thirdly,
number 1, number 2, number 3. Yeah.
Thirdly, a reliable estimate can be made.
Reliable estimate
can be made.
Yeah.
Of the probable outflow. According to IAS 37.
According to
IAS 37.
Yeah.
Provisions cannot be made for future operating losses.
Yeah.
As they do not make the definition of a liability which is a present obligation.
Which is a present
obligation. So anything what you call a liability is a present obligation. If you have bought goods from me, if you have to pay me money, it's a liability because there's a present obligation. Future losses are not a present obligation.
Okay, so liability is a present obligation, yeah?
Liability is a present obligation. If there's a liability, we will make a provision.
So any loss that you may occur in the future and is quite certain that you might occur, you don't have to
provide because it is not there is no present liability.
You don't have to do any provision for that.
No,
yeah?
No need to make a provision.
A very good point. Yes, I understand.
Yeah.
Okay, provision should be. Can I just quickly read to myself? So
yeah,
it's something I'm not.
Sure.
An entity has a present obligation as a result of past event. Second, so do we write them in the bullet points? Secondly, first, third.
Yes. You can write it in bullet form.
It is that it's easy for a reader, isn't it? Like when you're reading, it's nice.
Yes, because you have to understand the reader's perception also.
Yes, it's a very good. I love the language and the it's very sober, very
because you have to be very simple. You should not put lot of jargon because you have to remember that these your reports will be read by many non-accountants.
Absolutely. Secondly, it is probable that an outflow. So what is an outflow of resources will flow out? I just got confused with flow, outflow. It says second, it is probable that an outflow of resources will flow out from the entity. What is that supposed to be? Is it talking about?
It's a loss. The money going out. Outflow means money going out.
Yeah, I get that, but outflow resources will flow out from the entity. What is that supposed to mean?
Yeah, from the entity means from your organization, money going out. If you are making a loss, the money will go out.
So what is it? What point is it trying to make there?
What is that?
Like secondly.
If you have to make a provision, there are three conditions. One, you have to have a present obligation. Second,
I see.
There is a probability that an outflow will happen.
It's not a certain 100%.
Just because you have a present obligation, it does not mean that you will be paying. You may have a present obligation, but you may decide not to pay.
Sorry, I didn't get that bit.
You may have a present obligation, but you may decide not to pay. In that case, there is no probable economic outflow going out.
How can you not decide not to pay? Because
for whatever the reason, now you have.
Okay. So if it's in a different scenario where you really don't have to put the movie on the cinemas, you're talking about that. Then you decide not to use.
Yeah.
Okay.
Something like that.
Not about this particular. You're not talking about this particular situation. You're talking about
No, no,
generally.
we are there. IS 37 does not talk about a
About the
particular
IS 37.
situation. We
I
are,
see. So you're talking about general situation that
yeah, we have to
present
quote
present
the general situation and apply for the very specific.
Okay, so it's about number one point that it has to be a present obligation,
But
not a
this is
future
IS
or past
37. This
event.
is nothing to do with the film. This is all in the
Mm.
accounting standard.
Yes. So it has to be present obligation,
Yeah.
not a future or past event. It is based on it's a probability thing. So
Yeah.
it's probable that there will be an outflow.
Yeah.
So thirdly, liable estimate can be made from the
of the amount of the obligation.
Okay, so the reliable estimate according to the estimate company provisions can be made for the future operating losses as they do not. So it's not for the past. It's not for the. And the first point it talks about the present obligation. Second point it talks about probable
Present
outflows.
obligation, future outflow.
Yeah.
And the third one talks about the measurement.
Thirdly, reliable estimate can be made of the reported or probable outflow.
Yeah, it's a measurement.
Estimate.
It's a measurement.
Yes, measurement. Okay, so it's like forecasting the numbers.
If we can measure the loss, how much? Because all three conditions must be made. So the first condition is out. There is no present obligation. So because of that, the second and third will not apply. But even if there was a present obligation, if it should be properly measured. We should be able to measure and say this is the loss. But here they say 20% and all that, but we don't have the figures. What is 20% of what? So because of that, we can't measure it very reliably.
I'm with you, yeah. So it's right in the points about the IS 37, and then it's relating to the current situation.
Yeah, then we relate it to the current situation, and we say since the film is not yet screened, there is no present obligation. Hello?
Hello, can you hear me? Sorry, I pressed the wrong screen. Yeah.
Since the film is not yet screened, there is no present obligation.
There is, sorry?
No present obligation.
Yeah.
And the probable outflow of resources cannot be measured reliably.
Probable outflow
of resources cannot be measured reliably.
Cannot be
measured reliably. And therefore, we don't need to make a provision. In our quarterly financial statements for the first quarter of 2017.
We don't need to make a provision in our
quarterly financial statements.
Quarterly statements here.
For the first quarter of 2017.
With you, yeah.
However, since we expect a 20% drop in revenue,
we expect
a 20% drop in revenue, and since a huge loss is expected, in terms of integrity,
yeah.
We need to present our financial statements
Need to present
our financial statements
financial statements
truthfully and with transparency.
yeah
Since the losses are expected to be huge,
yeah
it is material
yeah
and therefore
therefore
the director should disclose it as a note to the financial statements,
should disclose it.
as a note to the financial statements,
Disclose a note or
as a note
disclose as a note
note to
to
the financial statements,
yeah
the estimated loss from screening
from the screening
of dinosaur crust tree.
yeah
That is what, as far as the first part of the question is concerned.
very thorough answer, very good answer,
Yeah.
very
So
thorough.
that is what the first part of the answer is concerned. So probably you will start off this because it's a report what it's asking. I need you to draft me a report. So you will start off report saying to Isabella from FM, and the subject will be the dinosaur crust tree, and you will say you will have to in a way be happy that Jonathan's have done some work, right? And also be disappointed that we are going to end up with a loss.
Mm.
So you will start off this one saying that I refer to your email and I'm happy to note that Jonathan's have redone the special effects, but I feel sad that we are going to end up with a loss, with a huge loss, whereas we expected it to be a box office hit.
Mm.
Right? And then you will say, as referred to in your email, I have specifically addressed the following two matters. So number one is what we discussed just now, and number two is about this newspaper article on the business record.
Mm.
So how are we going to motivate our thoughts on this? So we can see again, we can sort of mention that
Kumar, will you send me the answer, this mock answer for it as well, like an official?
yeah,
Do you
yeah,
have
yeah,
anything written?
we will be, I will be doing the weekend some mock answers. I will send you some of these.
Brilliant. Thank you, thank you.
Yeah.
It's just nice to have. So I'm writing. I'm happy. I'm writing it because I'll get the words coming through my hand.
Yeah.
It's a good practice. At the same time, it's nice to read the official.
Yeah, correct.
Properly how you.
Yes, we will. I will. First part and the second part, I will do some mock answers during the weekend for you.
Thank you. Appreciate it.
Right. So now we are coming to the second part of this question about the business record. So it's a paper, right? It's a paper. You remember in the pre-scene we had this business record talking about something in the film industry. Let's see what business record is. This is the business report recorder of 10th January 2017, right? Where they mentioned something about cinema attendance continue to rise. So this is another article in the business recorder about our company and the film, right? So now it is somewhat damaging because they say, one thing what they say is we denied it. Now that's pretty bad. If Anton Chan or some person has done that one, it is not properly ethical for us to do that one. Knowing that it is going to be a loss making, knowing that it is going to be a kind of a uh, problem film, for us to say that it is everything is all right is not properly ethical,
Mm,
right? So
mm,
senior
mm,
management denies the rumor that the law innovated is going through some issues with special living. So you as the management accountant should be very tactfully telling the management we should not try to deny the truthful
mm,
facts.
mm,
And Anton Chan, the distribution commented on the new frame is ready for the date and it will be a success even better than the earlier two films. So knowing that we are going to end up with a loss, to go before the press and to say that we are going to end up with a profit and a success even better than the other two is we are not ethical.
mm,
There's nothing illegal in telling a lie, but it's not
mm,
ethical. And our reputation will get completely shattered when we ended up with a loss.
mm,
Right? So, in the meantime, the film rival film producers have been arguing that it has undergone many changes and that the film viewers will not watch the film when it is released,
mm,
like the other two. So
mm.
we have to now counter this one, counter truthfully,
Yep.
motivate not to see the film. So as you rightly said, few things they can do it. So we have to say, so probably you want to say, um, in my view, it is wrong for us to give information to the press saying that the film will be a success, knowing that we have some reservations about the success of the film.
Mm, mm,
Right? So that's number one. Of course, you must be very concerned that the news has leaked to the press.
mm,
So that has to be something internal. That is also must be a little bit of worry for you that someone internally giving the news about your company internal things to the press.
mm,
So that also must be a little bit of a concern for you. So you will say, I'm deeply concerned that how the information got leaked into the press
mm,
and why Anton Chan has made a statement to the effect that the film will be a success, knowing that the film is going to be a not so a success.
mm.
So how
Knowing
can
that film might
hmm?
not be as knowing that the film might not be as good as its predecessors.
Yeah, because we know that one, and
Mm.
knowing that to tell the media or the public that it is good, it's going to be better than the other two, is willfully telling
Yeah,
the lies.
unethical. Unethical. Yeah, unethical. Yeah.
Willfully telling the lies.
Mm,
Right? So now to how to motivate the people to watch the film. There's article appearing, right? Already
mm.
things have the damage has happened. How to motivate the film? So we had the first
I
thing.
think
Mhm.
good advertising, or we
Yeah.
already have a ad.
Mm-hmm.
Make the emotional connection with the masses.
Yeah.
Remind them of the two big hits.
Mm-hmm.
Make them come back about
Mm-hmm.
the think about the first two hits.
Yeah.
You just remind them of, because it's not always about the reality, or sometimes
Yeah.
it's just how you make people feel,
Exactly.
how you make them. Yeah. So if they have a connection with the first two movies,
Yeah.
we need to sort of psychologically, I think,
Mm.
work on that viewers and make them feel that they are obliged to come and see the third part and see how the
Yeah.
plot changes, all that sort of thing.
Yeah. So I think it's a good thing to hire. One thing is to hire an advertising company. Maybe
Abs-
to hire a PR company and to make a good public relation effort, impact, counter in the press article, and to make it a success, because you may have a bad product, but surely it's not something
Surely,
to. Mm-hmm,
looking at the positive side as a management person, there is two
mm-hmm,
things you can do.
mm-hmm.
Number one is make the connection with the masses and make them feel they're obliged. They have to feel
Yeah,
part of this third because
exactly.
they've seen successful parts and they
Yeah,
need to come. They make them feel they will feel left out if they don't do this because
yeah,
they've seen the first two.
yeah,
Number two, on a positive note, because you already know it's not going to be a huge success, I think
yeah,
it's about managing their expectations.
yeah.
So whatever you on trailers, whatever the videos or whatever, I think is managing their expectations as well.
Exactly.
Maybe
Exactly. You have to
if
look at the viewer's expectation and try to manage
absolutely
the expectations and to create expectation.
to create them expectation,
To
yes.
create expectations. You're advertising maybe something like a loyalty scheme for those who have watched the film, the two films, kind of a rebate on the third film, right? Then the social
Yep.
social media
Game,
network and
mobile apps, games,
exactly.
uh, exactly. Social media games like you can
Yeah.
do play little things on Facebook and all that.
Yeah,
Yeah,
yeah. Social media network can be effectively used to promote the film.
and the youth. Yeah.
Yeah. So because it's all about the dinosaurs, so it may be about the children and that kind of a crowd also.
Yeah.
So you
Social
may,
media.
yeah, yeah, maybe school shows.
Exactly. Yeah, that's it. Yeah,
Yeah,
that's it. Yeah.
maybe school shows, that kind of a thing, one-to-one free, some like that. You have to now think of making a kind of a motivational factor for somehow people
Mm,
to attend the shows.
mm,
And the moment the people start attending the first week, the film will run. So
mm,
your trailers, appearances of the actors and actresses, you remember, right? They were spending fair amount on the appearances. They probably can make more appearances
mm,
rather than the normal one, and make it sort of more appealing for the people to watch the film.
mm. Yeah.
Of course, on a long-term basis, in addition to that, we may have to see how the news have got leaked out, because it was internal news. Getting leaked to the press is not a very good thing. But also, I think you will very politely tell that before Anton Chan gives anything to the media, should consult the board and get the board consensus view before releasing anything to the media.
Mm,
So
mm,
these
mm.
are some of the, so always this can be a question. The press issue,
Mm,
the press issues can be very, very, because you have to be, one thing, you have to be truthful,
mm.
right? Even however painful it is good to be truthful, because the truth will come ultimately. If you say it's
It,
just
it don't,
hmm?
yeah. In both questions, in both questions, it's a bit tricky where you want to protect your company.
Yeah.
But at the same time, like the first question, like, do you want to tell them about the losses?
Mm-hmm.
You know, you quarterly reports. Do you want to declare your performance or
Yeah.
what? What are you going to do about it? And the second one is about the media. Do you want to tell them or no? But
Yeah.
both of them, you have to follow the ethics.
Exactly. Yeah. Exactly. The right approach is to accept our mistakes, admit our mistakes, and be truthful. That is what
Mm,
good business ethics is.
mm.
That's what good business ethics is. So we have to, we can't hide the facts, because even if you hide it, those things will get exposed very soon.
Mm,
So you don't want to hide the facts. What you do is you try to uh, make the things much more clearer.
mm,
This is what is expected from all of us whenever we answer this kind of questions.
yep.
So that's the kind of answer we should be looking. So the two questions.
The first part, can we discuss a bit more? We've still got 10 minutes, if
Yeah,
you don't
yeah,
mind.
yeah.
If you can talk about IS 37 a bit more.
IS 37, that's nothing more. IS 37 is all about the provisions and the
mm,
liabilities. So in this particular question, it's all about the IS 37, the accounting disclosures, accounting implications. So as far as the accounting implications are concerned, the relevant standard is, as I said, the IS 37 provisions, contingencies and contingent liabilities. That is the relevant standard. So a provision is always a liability of uncertain timing or amount.
mm,
It's a liability, but you don't know when you have to pay, you don't know the exact amount. That's what we call a provision.
mm.
It's a liability of an uncertain time, uncertain amount.
But
Liability.
you,
Mm-hmm.
carry on, yeah.
Yeah.
I was going to say,
Yeah.
you mentioned the fact that we have to write a note on the financial statement about the losses that we might occur
Yeah.
as due to the screening of the
Yeah.
estimate loss that we might occur due to screening of Dinosaur Crash 3.
Yeah.
At the
That is
same
a
time,
note. That is a note
when
to
you are
the
declaring
account. Pardon?
that, so when you are declaring that to the board declares that to the shareholders,
Yeah.
then would not that not affect the movie?
Yeah, it will. It will.
Are you because that's doesn't matter how much you advertise, how much you do, because you have to let the board know.
Yeah.
Uh,
No,
and obviously it's not,
not let the board know, let the shareholders know that we
yes,
anticipate
the
a
board
loss.
board has to board has to let the shareholders know.
Yeah.
So once it's out with the shareholders, which we have to ethically,
Yeah.
then will it not affect the outcome? Will it not make things worse?
Exactly.
Because
Whether it's
once it's
worst
with the
or
shareholders, it's very public.
whether it is worst or not, the accounting implications requires whenever,
Mm,
because the shareholder is a different person, film viewer is
mm,
another person.
yeah.
You're playing with shareholders' money. So the shareholders need to be properly briefed about the profitability of the company. So
Mm,
one of the big films is going to end up with a loss. So from the shareholders' point of view, it need to be disclosed. But as from another angle, we need to handle the our viewers, the customers,
mm,
two parties. One, a
mm,
shareholder. Of course, a shareholder can be a customer. That's a different story. But a shareholder's interest is totally a different thing. He has invested money in your company. He wants to know whether the
mm,
film is going to make a profit or not. Film viewer is
mm,
not looking at the profitability. He is not worried whether you are going to make a profit or a loss. Film viewer is worried whether the film is good or not.
mm,
Two sides to it.
mm,
Film viewer will not be worried how much profit you are going to make out of it. He is worried whether the film is good or bad. So what we are trying
mm,
to portray for the film viewer is the film is good.
mm,
But for the shareholder, what we are trying to say is, look here, we have run into a few problems and because of that we are going to end up with a loss. We are not going to talk about the quality, the film. There.
mm, mm.
Two different angles you have to look at.
I understand, yeah.
Yeah. That is what you should be looking at. It's bad, but you can't help it. What is the other alternative? Or other alternative, suppress facts. Right?
Mm,
In 3 months time, 6 months time, it will get highlighted. If you don't
mm,
admit it today, the reality will show that it is going to be. So what happens is when a sin like this happens, the directors will say directors are of the opinion that this will end up with a huge loss, but your board is taking all possible action to mitigate the losses.
mm,
One of the actions to mitigate the losses is to advertise it much more intensively the film. So the people who did not want to see the film also will go and see the film. That's what you should be doing. One side, both sides you have to be truthful. One side being truthful, other side you try to sort of somehow to get the people to watch the film. Because film is not this film is not something that is illegal or something that is out of culture or something like that. It has some problem in the special effects. It's not something unhealthy. If it was food, and if it is some unhealthy food that you have produced, you don't want to, you should not sell it in the market. But this is not something like that. This is what they say is it will not be a success as earlier two films, and we produce is satisfied with to a great extent, but still it is not as per our original expectation. So it's not the question of the film being so bad, but the mass media publicity can make it much more bad.
Worse, yeah.
That is what we are trying to control it here. So as I said, the provision is always a liability of uncertain time or amount. Liability is always a present obligation arising from the past events. Liability
I like that.
is a present obligation.
Liability
Is a present obligation arising from past events.
Past events, yeah.
Past event. So to recognize it as a provision, we discussed three things. It must have a present obligation. There's a probable outflow, and also a reliable estimate can be made.
Present obligation.
A probable outflow.
Probable outflow.
And a reliable estimate can be made.
So in this situation, we had the obligation.
Because we don't have a present obligation.
That we has as a result, yes.
Because the film is going to get screened in 2017 May. We are in February. We don't have a present obligation.
Okay. Reliable estimate, you can't make it.
You can't make a reliable estimate, yes. There is a probable economic outflow, but all three conditions must be made. So because two conditions are not met, you can't make a provision.
Probable outflow means there is definitely a loss.
Yeah, because they say probable, because they say it's a forecast reveals it will end up with a huge loss. So there's a probable loss.
Yes.
But it cannot be estimated, and it's not a present obligation.
I'm with you now, yeah.
Yeah, so because of that, you don't need to provide for it. But having said that one, because it is material, because it can have an impact upon the shareholders' decisions, it need to be disclosed as a note to the financial statements. So this is what you should be looking at.
Yep.
And finally, I think you will end up with this this particular part of the story saying, what we can say is that my support is assured to make it a success somehow, even though we anticipate a loss.
Yeah.
Something like that. Because you must always show these people that you
are. Could you repeat again?
Pardon?
Can you just repeat that line, please?
Yeah, my support is assured. You can count on my support.
Yeah.
Even though we expect a loss, to make it as minimal as possible.
Yeah, I'm with you. Yeah, so it's a bit of empathy, a bit of concern about the situation, basically.
Exactly. Yeah, because you have to be part of that organization, and you must be concerned about the situation. Yeah.
Fair enough.
So that's good for that one.
Yep. Yep.
Yeah. Only thing Saturday I think we have made it for 4:30 I think. No, 5
Yes.
o'clock. 5 o'clock maybe
Yes.
little. Are you going for work after 5 o'clock?
I'm starting work 6, yeah.
Yeah. How about Sunday?
You want to do it Sunday instead of Saturday?
Yeah. Because Saturday I may not be able to do it at 5 o'clock.
What time can you do for
I
Saturday?
can do it later, but not early.
Sunday I have a Christmas dinner with my staff. We're all going out.
Okay.
Um, Sunday I can do it's my day off, so I can do it in the morning or afternoon.
Yeah, Sunday we can do it afternoon. I have 1 to 2.
What can you do on Saturday? Where you said 5? You can't do Saturday at 5.
Saturday I can't do it at 5. No, yeah.
You can do 4?
No, Saturday I can do later, but not early because we have a family dinner here.
Oh,
Yeah.
yeah. I'm working late.
Yeah. Saturday, because of that I can't make it Saturday because Saturday we have a family get together. So the time 9:30, 10:30 will be the time here. Sunday I can do it. Sunday I can do it 12 noon your time.
Sunday at can you do a bit later?
Yeah, can.
Haircut in the morning. Yeah.
What time?
2 p.m. Sunday.
Yeah, 2 p.m. is all right by me, Sunday.
Is that okay?
Yeah. Sunday 2 p.m. is all right. So we make it Sunday 2 p.m. instead of Saturday. It will be Sunday 2
Great.
p.m.
I've got Michael Curtis that you mentioned last time to read. Then I've got IS 37 that you already mentioned. Anything that you might suggest meanwhile to read?
Start on value chain.
Value chain.
Yeah, value chain is also good for this question, and also the balance scorecard.
Balance scorecard.
Yeah.
We have a scorecard in the hotel.
Yeah. Start reading those
The whole bonus stuff it depends on the scorecard.
Yeah, exactly. The balance scorecard, because even in this film, there will be some balance scorecard items coming up.
I see. All right. Okay.
Right. I'll see you on Sunday at 2 o'clock then.
Brilliant. Thanks, Umar. Thanks very much for meeting.
Have a great day. Right. Bye.
Can you also send me, apart from sending the YouTube link, can you send me how many hours left, how many have used?
Sure. Right. Okay.
Now, time is getting close. I need to spend some more.
Okay. Sure. Right. Okay.
Thanks, Kumar. Thank you.
Right. Bye.
Bye.